Very quickly, this will be the last video that I make for today. I just want to go in to further explain why or how I frame my trades. So for the past, in my other video, if you look back to see exactly or to hear exactly what I was referring to as this 15-minute fair value gap on higher time frame gets left open for tomorrow, we get hit with this constant back and forth price action for quite a while. I am figuring out what kind of trader I am and how do I catch trades or scalp to catch multiple trades in a trading day. With my one trade, I was up 500, but I wanted to see if this trade would plan out and if I could micro scalp. I was willing to, incur a 6 handle loss. It was slightly a bit more because my entry was pretty bad. It's going to be about a 14 handle loss, right? So about the same much as my profit, but I wanted to see if my analysis would still be on point. This trade would tell me whether or not if we should be continuing lower for quite a while. I would be okay if price wants to come back to this level, but I would rather see price dump now and sell now off of this fair value gap. I would rather see price dump from that. And if we pull out the middle line, you see how nicely price has just tapped into that? If you decided to sell here, held your stop to this candle, 5-point stop, targeting these relative equal lows, what would happen? Let's just watch, see what would happen. This is a 25 handle gain and a 5 handle loss. At this point now, drag, zero risk. Zero risk. You are waiting for your take profit of 25 handles. You have 2 contracts for 25 handles. 2 for 25 equals what? If each tick in this market moves $2, 25 times 2, 50, right? But add the 0, so 500 times 2, $1,000 gain right here for how much of a loss? It was 5 handles, right? So 2 contracts times 5 handles equals, you do 5 times 20, each tick is $20, $100, right? 100 times 2 for a $200 stop loss. You have zero risk now, so forget this. All you have is a $1,000 take profit. Are you going to hit? Could have taken one contract off right here. That's one contract. You took some profit. That's some money you just made. Now it's no longer 1,000 because you took profit of some. That would probably be like a $400 or maybe $300 gain right there with that one contract. Now you're still $300 in. You can take that money out now or wait for your take profit to hit, but you have zero risk on the trade. Zero risk. There's nothing to be afraid about. There's nothing to be worried about. You're trusting your analysis that because of this previous price action, this fair value gap held, right? When you look at this held. See how clean it is. Look how clean that is. That held. Open fair value gap. This would be your breakaway gap. Fair value gap, tapped in, respected. Fair value gap, tapped in, respected. Once you finally trust your analysis and you finally, listen to your higher time frame bias, you easily catch these trades. Boom. $1,000 would have been made. You would have been done for the day. That's it. But back to what I was saying. We'll go over what I was essentially trying to do, which was capitalize off this fair value gap and hold for this entire range to see this swept. I was satisfied with this because now we are about $900 up on the day. So that's nearly $1,000 to me. More than enough for me. And I wanted to see if I can, prove a point here, which I hope I did. Hope that clicked for some of you. But if not, just rewatch this video and see what I'm trying to get at, right? From the start, we have that 15-minute fair value gap that we want to see left open. That's our bias. We're setting our bias for tomorrow. Tomorrow, we want to see this left open. So today, what should price do within this range? Well, price is not going to come back to here because we're referring to this tomorrow. So where is price going to go after this point? Well, we just swept liquidity. So where could it go? It's not going up. We want this left open. So it's only coming down to where? Sell side liquidity. Sell side liquidity. Sell side liquidity. To then what? Just range. It's just ranging today. It's doing what? What happens on Mondays? It's accumulating. That's right. Now it's starting to click, huh? It's accumulating. It makes sense. What could we anticipate tomorrow to be the manipulation? Where is it going to be? We don't know. But we do know on whatever side it is, if it's above here or below here, we're going to anticipate the real move is the opposite direction. That's what manipulation is. That's how you frame it to then catch distribution, where we actually distribute towards. Again, just a quick video. Wanted to outline that one point. So hope that was a bit clear. If not, rewatch the video. Ask any questions. I'm more than happy to answer them. With that, have a great day, and we'll see you guys tomorrow.